Hello and welcome to MasterChartsTrading.com market recap for Friday, June 26, 2015. This week we'll look at small caps that hit all-time highs and on good market breadths as well. The S&P 500 did not make new highs, and it seems that the market breadth is also weakening further. As some of you may have heard, the Chinese shares took a major nosedive this week, and we'll examine if this is a good time to jump back in or not. Also, bonds TLT is at a critical support, and gold erased pretty much all of the previous week's pop, and market breadth for GDX seems to be calling for lower prices ahead. The same thing goes for market breadth for XLE, the energy ETF. And we'll look at oil at maybe finally rolling over to the downside. And one other item we'll examine is cocoa, which became now a market leader. Okay, let's go to the charts. So today we'll start with a little bit different. This is a chart of Russell 2000 IWM. So obviously a bullish chart. This is a very strong bullish chart. We just hit two all-time closing highs and an all-time high within the same week. We did pull back a little bit, but this is quite normal. After hitting all-time highs, some profit taking is absolutely normal. We're now at first support, about 127 here. As far as market breadth, I think it is confirming the all-time highs. You can see that this is a higher high in the AD line, or on balance volume, and the small cap advanced decline line also is confirming an all-time high as well. Now, breadth momentum oscillator is in an upswing and in a positive territory, and so is the new highs new low indicator. We're definitely making more new highs than new lows. Here's another chart, next one I want you to take a look at, and this is the same thing, Russell 2000. This chart is going back to the last year's August, and so this is a October low, and you can see that we came quite a strong rally basically from October low. Now, if we look at market breadth, you can see that percentage of stocks above the 50-day exponential moving average has been steadily dropping since, well, at least the beginning of 2015. But as far as the percentage of stock above the 200-day exponential moving average, it's been pretty much level, maybe slightly dropping here in the very last couple of months. So not much of a divergence, maybe a very slight divergence here in 200-day moving average, percentage of stocks above the 200-day moving average, but above the 50-day moving average there is definitely a divergence here. But again, how much does it make a difference? I'm not sure. Next chart, the S&P 500 chart, let's look at that. Their divergences are more obvious there. So you can see that advanced decline line made a clear lower low here, and then on balance volume is also trending lower. In fact, we're hitting new lows in on balance volume while we're pushing up in the price of the S&P 500 itself. As far as the breadth momentum, you can see it's sort of still in negative territory, but it is above its 10-day exponential moving average, so it's moving in the right direction, I think. But you can see that it is a significantly weaker chart than that of IWM that I just previously showed a second ago. So here is you can see that the new highs, new lows indicator is basically almost at zero, so there's very few new highs being made. Next chart is the same similar chart to what I showed for IWM. You can see that we're pushing higher for the S&P 500. We're making higher highs and higher lows. But here you can see a more clear divergence. You can see that 50-day moving average is clearly trending down, and rather percentage of stocks above the 50-day exponential moving average is clearly trending down. The same goes for 200-day exponential moving average. There is less and less stocks pushing up, rather are being above the 200-day exponential moving average. So there are definite divergences in the large cap universe, and whether or not this will lead to any kind of a substantial correction remains to be seen still. We're still pretty far off from even the first support, which is at 2072 over here, and then the next support, significant one, is about here at the 200-day moving average, around 2045, 2039. We haven't broken any supports yet, and we held supports for now. Next, let's look at ASHR. So this is a Chinese mainland China ETF tracking fund. So first of all, this is a tremendous run. Even from March here, we had like a 50% gain from March till just a few weeks ago. We had a huge gain here. Then here you can see that there was a divergence that started to appear between the on-balance volume and the price of the price of the index itself. You can see the on-balance volume made a higher high here, but here it did not make a higher high. So you can see 42.7, 41.4. So looks like the price pushed up while there was some distribution happening already here on the June 15th. Now this is a great as a hindsight kind of indicator, but to trade on unbalanced volume itself is quite difficult. But it is a good indicator showing that there is distribution happening. And you can see that on Friday, after this just a tremendous drop, this is a 10% drop on Friday, we had a unbalanced volume break below this low that we made in mid-June. So a couple of things on this chart. Number one, ASHR was on the upside leader here. You can see here it was above 90 for most of the year basically, and even before that. But here on the last day it dropped below 90 on this Friday. So in this case, basically what's happening is the ASHR, this Chinese tracker fund is no longer a market leader. It's below 90 for SCTR, Stock Chart Technical Rank. What does it mean? It means that speculative money that has been flowing here just at a tremendous clip looks like it's no longer flowing here. And even though we're oversold, for example, this MACD indicator, you can see there's definitely negative territory. And even though we're oversold, now we're no longer the leader. And it means that we could potentially see a rebound, but since it is no longer a leader, we can see a weaker rebound. So I'm expecting a rebound possibly from these levels, unless we have complete collapse. But how much of a rebound it will be is difficult to predict, because once again we're no longer a market leader. SHR is no longer a market leader. So next chart we'll look at TLT, at the bond fund, a 20+ year treasury bond fund. And I've shown this chart in the past. There is a definite selling pressure that's been happening in the TLT from February even. And right now I think we're at a critical support basically. So if we break below this support, I think we're going to be officially entering a bear market. And what that means is a bear market, it is no longer as profitable to find the bottoms and to try to time the entries on the upside. It is in fact more profitable to do the opposite, to try to short any kind of rally that's going to happen. Hasn't happened yet, but I think once this support is broken, I'm probably going to say that TLT, at the very least TLT itself, is definitely in a bear market. We're getting very close. You can see that the StockCharts technical rank is at 8.8. That's definitely a bear market territory for TLT. Next is gold. Last week, you can see there was a the rally started, this short-term rally started in June, I believe, 7th here, as a support held, and the rebound was pretty strong. Last week we had a pretty big gain right there, but look at this, we completely gave everything back this week and parts of last week, and we're basically back to square one at this point. Now you can see that these long tails out the bottom and here indicate that there is some support or some buying interest at this levels at 1170, 1160 area. So I'm gonna say that support is holding for now, but as again, gold is a bearish security, therefore any kind of rebound I think will be shorted. So this was just a perfect opportunity to short right here. This was not as good of opportunity because you can see that the MACD did not cross into positive territory. Here, the MACD did cross into positive territory. Okay, well, then as far as unbalanced volume, maybe we're seeing some accumulation. It's difficult to say, but you can see that here is 9764, here is 99. So there's possibly some accumulation happening here. And once again, I'm not trying to pick the bottom in a downtrending security. And since gold is downtrending, I'm trying to find overbought conditions and short those. GDX, market Vectors Gold Miners ETF, probably one of the most traded gold ETFs out there. So obviously, same thing as gold bearish security, looking for a shorting opportunities within a bigger downtrend. So we're looking for overbought conditions within a bigger downtrend here and here, or just excellent shorting opportunities. We did enter the market, I do believe, around here on this gap down and drop. We still have some of the position open. We did cover some I think here, and I believe during this rally as well. But we still have a position open. You can see that all of this gain basically was given up, and you can see that already close below this level from mid-June here. And both of these candles are quite bearish, and their prices are pushing lower and lower. And you can see that new lows in the advanced decline line, new low in the advanced decline volume line. So even before the lows here, the advanced decline lines already made a lower low. So in other words, the market breadth is pushing the index lower. As far as unbalanced volume, possibly, once again, there's some accumulation happening. You can see that there is a lower low here and a higher low here. So potentially people are accumulating on this drop, but it's really difficult again to time the bottom. It's really difficult to say that because this is a downtrending security, and for it to become bullish, we need to see a substantial rally and then a pullback. And then on that pullback, if the support does hold and a rebound takes place, then we can say, okay, now it's no longer bearish. At this point, it's still very much bearish security, and I will continue to short rallies. In fact, I still have a position open in dust at this point. Similar picture for XLE, Energy Select Sector, SPDR. So our short signal was here back in April 27th. Then we had what's called an outside reversal, and you can see this big red candlestick is completely engulfing this little red candlestick, so, and then confirmed the next day. So it kind of looked like that. And then a drop of about 7% from a short signal entry right there. Now, similar thing, you can see that the price just made a, well, possibly lower low, higher low rather. But here you can see advanced decline or unbalanced volume and advanced decline lines made already a lower low. In other words, the market breadth is already in the it's like a bearish divergence. In other words, I'm expecting prices to at the very least retest this low around $72 and possibly even break down and go lower to maybe on $70 or even lower. Now you can see that MACD has crossed over above its signal line, so momentum to the downside has decreased, but it doesn't mean that it's going to rally from here. It just means that it may continue dropping at a lower pace. And especially if oil, so this is a chart of oil West Texas Intermediate, if it continues, so basically it went nowhere, it kind of was going flat, and maybe this is a bull flag, but we need to see a breakout here around above 62.58 on a good, good looking candlestick, bullish candlestick. Hasn't happened yet, so I'm guessing. And also another thing right here, 50-day moving average, you can see that we tested and held support for now. Now this is a bearish security. SCTR is 9.6. 50-day moving average is below the 200-day moving average right there. So shorting opportunities within a within a bearish security come when the overbought conditions are manifest, and the manifested overbought conditions here in May, you can see MACD is above 0. Now, as far as the short signal is concerned, this was not very productive just yet, but if we drop below, well, at the very least this support, and if we go below this support, you could easily see prices in the 54 area to test these support levels and possibly even break down lower. So again, my money is right now on the downside. And finally, I was looking through various charts of commodities, and cocoa piqued my interest because you can see that this is the price of cocoa, the actual spot price, end of day daily price. Breakout right here. You can see the price was, this is definitely was a bearish security here, because you can see 50-day moving average below the 200-day moving average. So shorting opportunities, you can see MACD was positive, so a shorting opportunity right here was productive. But then a rebound took place, and this rebound took place, and actually a price broke out above this high, this peak right here. Classic breakout, throwback to the support, and then rally of the support in a strong, pretty strong pattern. You can see that also cocoa ETF NIB, I put the SCTR here, it now is one of the market leaders. You can see that SCTR, Stock Shares Technical Rank, is at 98.7. That's pretty impressive. So in other words, cocoa is now one of the market leaders, and I will be looking for buying opportunities for NIB, NIB, once the pullback to the 50-day moving average around here will come around, and I'll be looking for possibly an entry opportunity once the uptrend has resumed, provided that we're still a market leader at that time. So that's it for this week. Let me just show you very quickly how to find us on the internet. Go to MasterChartsTrading.com. We're getting ready to launch a trade alert services, so please do check back here often. We have a blog, videos, and public charts and social pages. So follow us along on the public charts page, and this page here has most of the charts that are mentioned in this video. Do sign up for our mailing list and subscribe. This way you will be one of the first ones to be on a list to receive a promotional pricing for our upcoming trade alert services. If you have any of the Twitter, Facebook, YouTube, or StockTwits accounts, please do find us there as well. That's it. Thank you for watching, and have another great trading week. Bye-bye.